Hey folks, Dan Frio here, the Mortgage Update. Today is November 25th, and it's going to be a short week, and I think it's going to be condensed, and so there's going to be some major moves or changes up and down in all the markets. So you see, if you come in daily, you see this is a great number for us. Rates dropped again today, so that's good. For those of you new to the channel, what we do on this channel, it's the Mortgage Update with Dan Frio. I'm Dan Frio, and this is the mortgage update that I do every day, or try to do it every day. You can also hear me, if you're in the Chicagoland area, you can hear me on WYLL radio, weeknights, weekdays from 7:30 p.m. to 8 o'clock. And you can hear me on WIND radio, Saturday mornings from 7 a.m. to 8 a.m. And I'm a mortgage advisor in the Chicagoland area. I can do probably 2/3 of the country, so if you need help, I'd love to help you. And I'll give you my details at the end. But we watched in these videos, and what I try to do is educate people on a daily basis what's going on with mortgage rates. And we talk about the other markets and what's affecting and why there's changes that there are in mortgage rates. So what we follow on this channel is the mortgage-backed securities markets, MBS. This is the bond or the tool that directly affects or controls mortgage rates. It's not the 10-year Treasury. It's nothing else. It's this specifically. So there was a good move today. This is the price of a bond of this mortgage-backed securities. So as the price goes up, the yield or the interest rate on that bond goes down. So if we look at what's happening, and this is just a little chart of what happened in the last quarter, we see it bounces through the market, but where we are right now is right here today. Green is good, and so we monitor this. There's some bumpers in here, so let me go basically and give you some basic terms. We watch two triggers or two lines here. These are Fibonacci levels, the bottom and the top. Think of this as if you're bowling and they're bumpers, and they bounce through here, and that's basically hit here, hit there, hit there. So then what we do is we try to kind of microscope on these rates to see if we can catch little trends, because little trends here can save you money. I'm a mortgage advisor. If I can save you on a $250,000, $300,000 loan, 0.25% your rate, you might save $30,000 over the life of the loan. So this is what I do for a living, and I take pride in this, and I watch this meticulously every day. So you're going to see all kind of different lines in here. So we know we're going to bounce between these, but I try to pinpoint it down and think of this as a stock. If the stock is moving around, you want to kind of time it at the perfect time. So we dig down a little deeper, and we have 30-day, we have the mortgage-backed securities here, 25-day moving average, 50-day moving average, that's the DMA, 100-day moving average. We put these lines in here to kind of get a little more detailed on what's going on. And you'll see a lot of times you'll hit these lines and they'll just stop, and it's like bam, bam, bam. All these numbers, and there's a reason for all this. These are very technical pieces of the puzzle when it comes to these rates. And it also is the same thing with stocks and other bonds. So what I try to do is say, okay, here's what happened today. Well, let's figure out what's going to happen tomorrow in the next few days. So let's go over and see what economic data is coming out this week that might make some changes in the market. Well, the Treasury auction came out today, and it was very good. And that's what pushed prices up, and again, yields down. It's a condensed week, but there's a lot of data coming out. You're going to have the home price index coming out. That's probably not going to really have any burden on the what happens in the markets, but at least gives us, tells you, is your house appreciating or not? What's going to make some changes in the market is manufacturing index. How's manufacturing going? So on this channel, what we try to focus on is manufacturing. Is it going robust, or is it starting to come down? So let me explain a little bit to you. Is the economy is doing really good? Manufacturing is doing phenomenal. Sales is going well. Income's going well. Jobs are going well. You're going to see a lot of money going into the stock market. Well, let's say there's a basket of money. That money can be distributed, wherever you want to put it. But if you put the majority of money in stocks, you're going to have to. So you put it in stocks, and so you're taking away most likely from the bond market. So that'll drive down prices. As you drive down prices, yields will go up, or interest rates will go up. So when the economy is doing very well, people don't buy bonds, they go into the stock market. Now you have uncertainties in the market. Manufacturing numbers start to slow down. Employment numbers start to get weak. You have tensions with impeachment, overseas, Ukraine, the Middle East, all these uncertainties. People will flee to safety. Thus, they take their money out of stocks, put it into bonds. Stock market goes down. Bond prices go up. What happens when they go up? Yields come down or interest rates come down. So that's basically, just think there's a basket of money where that money's flowing in and out of. And that's what we try to focus on. So manufacturing numbers are going to come out. This is going to play an important role in what's going to take place. So this number is something we're going to monitor. The transportation indexes, that's a key thing that I explained to everybody last week. There's a CASS freight index that a lot of people don't monitor, but I do. And it's telling us what manufacturing goods are a lot of goods being manufactured and shipped, or is it starting to slow down? We're starting to see a slowdown there. So manufacturing is starting to get weak. The transportation indexes of shipping those products, think of a widget, you make a widget, you ship that widget to a store, Walmart, then the consumer goes in and buys it. Well, if you're not manufacturing as much and you're not shipping as much, well, the economy is going to start to slow. Okay, again, let's go back. If the economy is going really robust, people go into the stock market. As things kind of slow down and you're uncertain about things, you're pulled out of the stock market and go into bonds. So that's what we follow here. So I'm trying to give you some indexes to watch. So the manufacturing index is going to play a key role. Is manufacturing strengthening, stagnant, or is it starting to come down? And lately we've been seeing it coming down. Consumer confidence, that plays a big role. If consumers are really confident they're going to have a job and everything is going well, they buy more stuff. Let's piece this together. The more stuff they buy, say a widget, they buy a widget, well, you have to manufacture more widgets. So you manufacture it, you ship it, you get it to the consumer, and they buy it. Well, if consumer confidence is going down, they're not buying as much. Thus, not as much stuff is being manufactured. Therefore, not much, the transportation part starts to slow down. It's a kind of a domino effect throughout the whole part of this. So this is going to play a key role. Gross domestic product, that'll play a key role to say what's happening with production in our economy. Durable goods orders, how much is getting produced and sold. The transportation part of that here. I know I'm getting kind of confusing and we're digging in. There's a lot of data this week. Durable goods orders. Durable goods, how many people are ordering and how many companies are ordering big ticket items. If these numbers start to slow, again, you start here. Let's start here. Personal income, personal spending. If this is going up, people are making more money, they're spending more. Well, obviously more stuff needs to be transported. Going backwards, more stuff is being manufactured, and it has a domino effect. I think you know where I'm going with this. So there's a lot of data coming out this week, and we're going to watch a lot of this. Wednesday is going to be a condensed day, so you have all this data coming out basically before noon. So I'm going to be sitting at the computer watching all of my loans, seeing what's going on. Fortunately, unfortunately, your loan officer might be on vacation that day. I'll be sitting at my desk protecting my clients. So that's what we're watching today. The market, there's kind of an anomaly that happened today. I said that there's a basket of money. People are buying stocks and or buying bonds. Stock market went up today, and bond prices went up. That's weird. That usually does not happen. Well, what happened is the bond index or the bond market was good today because the Federal Reserve is coming in and they're buying more bonds. So again, the more they buy, the higher the price, the more demand for that product, the higher the price, thus pushing down yields. On the flip side, people are starting to think that there's a China deal coming in play again, which I again don't agree with because there's so many pieces of that puzzle, and I think they're going to address, if there's 100, they're going to address 5 of them. There's going to be 95 left on the table. So I don't really think anything's going on there. So I know I threw a lot at you today. I apologize, but just to make it in short, there's a lot of data coming out this week. And hopefully your mortgage advisor isn't on vacation and they're watching this for you, because like I said, 0.25% reduction in the rate that you're getting. Let's say it's a $300,000 loan. You're probably going to save, maybe $30,000 over the life of the loan. So if I can be of any help, reach out to me. I'd love to help, or at least give you a secondary opinion on what you're getting, or maybe I can beat what you're getting. You can reach me at 844-775-LOAN, which is 5626, or email me at dfrio, which is FRIO, at parksidelending.com. Please don't forget to give me a thumbs up. Click the subscribe button down there below. Leave a comment. I answer every comment that's posted. I'll get back with you within a couple days, if not the same night, and I'll answer any questions that you have. Check me out. Probably the best way to check me out is just Google Dan Frio, DANFRIO, the mortgage update, and I'd love to help. So God bless. Take care. Have a good night, and I'll be back again tomorrow. See ya.